Hi, Tim Biggam back again this week for Traders Exclusive, and we're seeing a little bit of a pullback after yesterday's big rally post-Fed announcement that they might be sitting on their hands for a little bit longer than they thought. I think it's important to kind of take a look at why they came out and said that. You know, the reason being that GDP was tooled down via the Fed. We're looking at growth slowing by about another 0.4 over there. Previous estimates are also looking for inflation to remain subdued. So, you know, this kind of low to zero growth environment, you know, which I guess it's that free money. The initial reaction is, you know, buy stocks. But when you think, you know, why is the money free out there, it may give pause to the rally. And I still like selling out of the money call spreads as kind of a trade structure going forward. It's very much akin to, you know, if someone says they lost weight, your initial reaction, oh, that's good. If you find out it's because they're sick, all of a sudden you're like, maybe it's not as good. So kind of what happened with the Fed yesterday, I think, you know, where the initial reaction was, yeah, we're getting more free money, but the reason being that all the free money that's being put out there so far is starting to have certainly a diminishing effect. We're seeing zero interest rates certainly over in Europe still, which, you know, I never thought I'd see in my lifetime. We're seeing, you know, even the thought of a 25 basis point increase here, you know, stirring controversy. So I think at some point, you know, this addiction to free money has to be broken. For us to kind of emerge from this, might have to go through some pain, but we'll see. So as I said, the previous two shows remaining more opportunistic rather than tactical. Using those, you know, RB trader option scanners to identify, you know, some option possibilities out there, you know, looking for comparatively overpriced or underpriced calls based on option buying or selling. We saw some big buying in GES calls over the past 3 days. They came out last night with earnings that beat the stock up sharply. So, you know, the paper coming in to buy those calls before the earnings announcement, you know, was rewarded. And many times we do see, you know, some smart money coming in to pre-position in the options market. So using those option scans, again, I use RB Trader to scan for mine, you know, to identify when there's big positions being built in options, many times as a prelude to a big move in the underlying stock. So a few ways to play it depending on how big they move the options. As you know, I like to use implied volatility and analyze that. So many times I'll jump in and buy the underlying shares, you know, and sell out the money calls. Trade on FOLD that was done yesterday identified some buying in the April options where they were really kind of aggressively buying. So simply went out, bought a few shares, sold those calls. They came out with an announcement today of getting approval on from a regulatory agency. So the stock is up sharply. That trade worked out well. Again, that aggressive call buying, you know, I'm not going to say was in the know officially, but anytime you see that, many times it does prelude a, you know, big move in the underlying shares, and we'll see going forward, you know, just how much that move is. But the stock's up about 23% this morning. So until next week, this is Tim Biggam, and especially this market environment where we're trading at, you know, rich historic multiples on stocks with historically low interest rates. I think, you know, the yin and yang will continue. So keep those position sizes in place, those stops going, you know, and maybe target your profit and loss levels a little bit tighter. Take care now.